Hello and welcome back to the channel. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. In today's video, we're taking a close look at a pure price action expert advisor called Hikkake Trap Reversal. This strategy uses no indicators at all, no moving averages, no oscillators, nothing. Instead, it reads raw candle patterns to spot a classic false breakout trap and trade the snapback that follows. By the end of this video, you'll understand exactly how it finds its setups, how it manages risk, and how to tune its settings. Let's get started. So what exactly is the Hikkake Trap Reversal strategy, and who is it built for? At its core, this is a pure price action and candle pattern system. It deliberately uses no indicators of any kind. There are no moving averages, no relative strength index, no average true range, nothing at all. Instead, it reads the raw structure of the candles themselves to find a very specific and well-known pattern called the Hikkake. The Hikkake is a false breakout trap. Picture a market that has coiled into a tight range, like a spring being compressed. Breakout traders pile in when price appears to break out of that coil, but the move is a fake. Price quickly reverses. Those traders are trapped on the wrong side, and their forced exits add fuel to the genuine move in the opposite direction. The edge here is behavioral. The strategy is essentially trading against the crowd that just got caught. This expert advisor is designed for whippy, stop-hunt-prone instruments where these false breakouts happen often and the snapback is fast. Good examples include GBP/JPY and gold, typically on the 15-minute or 30-minute time frame. Because every level it calculates is based on fractions of the candle ranges themselves, the logic scales naturally to almost any symbol, time frame, or level of volatility without needing to know the point size. Who is it suited for? This is really for traders who appreciate clean, rules-based price action and who want to understand the mechanics of trap patterns rather than relying on lagging indicators. It's an analytical, patient approach that waits for confirmation before committing. As always, this video is for educational purposes only, and nothing here is a promise of profit. It's a study of how the strategy is designed to behave. Let's break down exactly how the Hikkake Trap Reversal strategy thinks. Everything is read from the three most recently closed candles, which we'll call the mother, the inside, and the fake. First, the strategy looks for the mother bar. This is simply a candle that defines a local box of support and resistance. Next, it needs an inside bar, a candle whose high is below the mother's high and whose low is above the mother's low, so it sits entirely within the mother's range. On top of that, the inside bar must be tight. Its range has to be no larger than a set fraction of the mother's range, which tells us the market has coiled into a genuine squeeze. The high and low of this inside bar become the micro resistance and support that every breakout trader is watching. Then comes the trap. The third candle, the fake bar, pokes the wrong way. In a bullish setup, the fake bar prints a lower high and a lower low than the inside bar, a downside break that lures sellers in and traps them. The strategy responds by arming along and waiting for price to reclaim the inside bar's high. In a bearish setup, it's the mirror image. The fake bar prints a higher high and a higher low, trapping the buyers, and the strategy arms a short, waiting for price to lose the inside bar's low. But arming is not entering. The strategy waits for a real trigger, and it must arrive within a limited number of bars or the setup is abandoned. The trigger is a later candle that closes back through the inside bar level and is a genuine momentum candle. That means its body must be at least a set fraction of its total range, pushing in the trade direction. Only when the close confirms the trap has failed and momentum has flipped does the strategy enter at market. Never on a simple wick poke. Risk management is built into the structure. The stop loss is placed a small buffer beyond the trap extreme, the far wall, which is the lower of the inside and fake lows for a long, or the higher of the two highs for a short. That's exactly the level where the trade idea is proven wrong. The take profit is then set as a reward multiple of that stop distance, so the target always scales to the size of the setup on any symbol, any time frame, and any level of volatility. Let's walk through this illustrative chart to see the strategy in action, first on a long trade and then on a short. On the left, price forms our first mother bar, a wide candle that sets the local range. The next candle coils tightly inside it. That's our inside bar, and the green line marks its high, the level the strategy is watching. The following candle then pokes downward, printing a lower high and a lower low. This is the trap. Sellers think the coil has broken to the downside, but they're about to be caught. The strategy arms along. On the next candle, price snaps back and closes firmly above the green inside bar level with a strong bullish body. That momentum close is our trigger, and the buy entry fires. The stop loss sits on the red line, just below the trap extreme. From there, price climbs steadily, candle after candle, until it reaches our take profit target, closing the long in profit. Now watch the right side of the chart for the mirror image. Price forms a fresh mother bar near the highs, then coils into another tight inside bar. This time the fake candle pokes upward, printing a higher high and a higher low, trapping the buyers who chase the breakout. The strategy arms a short and watches the inside bar's low, now marked by the green line. The very next candle reverses hard and closes below that level with a strong bearish body. That's the momentum trigger, and the sell entry fires, with the stop loss resting on the red line just above the trap. Price then falls away, candle by candle, until it reaches the take profit. Both trades follow the exact same logic in opposite directions. Remember, this is a simplified illustration for educational purposes only. Let's go through the settings you can adjust. The first is InsideMaxFrac, defaulting to 0.80. This controls how tight the inside bar must be, measured as a fraction of the mother bar's range. A lower value demands a tighter coil and produces fewer but cleaner setups, while a higher value is more permissive. Next is ConfirmBars, set to 3. This is the number of bars the strategy will wait for a valid trigger after arming a trap. If no momentum close arrives in that window, the setup is discarded. Widen it to be more patient, or shorten it to demand a fast reaction. MomentumBodyFrac defaults to 0.50. This is the quality gate on the trigger candle. Its body must fill at least half of its total range to count as conviction rather than a hesitant wick. Raising it filters for stronger reversals. Lowering it lets more triggers through. BufferFrac, at 0.15, sets how far beyond the trap extreme the stop loss sits, as a fraction of the inside bar's range. A larger buffer gives the trade more breathing room, but widens the risk. Reward ratio defaults to 2.00, meaning the take profit is placed at twice the stop distance. Increase it if you want to aim for larger moves, but expect a lower hit rate in exchange. Lots controls your position size, set to 0.10 by default. Always size this to your own account and risk tolerance. Finally, Magic is the order identifier, set to 7314, which lets the expert advisor recognize and manage only its own trades. As always, test any changes thoroughly before applying them to a live account. And that brings us to the end of our deep dive into the Hikkake Trap Reversal strategy. We've covered how it spots the inside bar coil, identifies the false breakout trap, waits for a momentum close to confirm the reversal, and manages risk with a structural stop and a reward-based target. Remember, everything in this video is for educational purposes only and is not financial advice. If you found this breakdown helpful, please give the video a like, drop your questions or thoughts in the comments, and subscribe so you don't miss our future strategy analyses. You can find more tools and resources over at www.algobot.live. Thank you so much for watching, and I'll see you in the next one. Past performance does not guarantee future results. Trade responsibly.